Hello, my name is Igor. Welcome to my market review. Today is the 30th of September, Tuesday, and let's start with a quick recap of what's happening in the macro space, and then we'll go to charts, and I'll just explain what I'm doing about what's happening in the markets. So what was good for the markets during the previous week is that we got good numbers on inflation, and it creates more room theoretically for rate cuts. So it's bullish, and we also saw another sort of a confirmation of a plan of the fact that the plan which Donald Trump's administration is implementing could be working, which means reshoring industry back to the states. So personal income is still strong and actually surprisingly strong. And today we also got good job openings. And that could also maybe lead us to stronger report on non-farm payrolls on Friday. And tomorrow we will see ISM. ISM, on the contrary, is below 50, and this is actually recessionary. So overall, the macro picture is a mixed bag. But with that being said, we can transition to actual trades, and I think it's more efficient to concentrate on these trades instead of trying to guess what's about to happen next. The Instead of guessing, good trader, good portfolio manager should be positioned so his risks are very suppressed by, but the upside is big. And some things I'm doing okay, and some things I do not okay, and I make mistakes too, and I will discuss one of them, which I actually made tomorrow in the morning. So when I witnessed the macroeconomic release on Friday, and tame inflation automatically, as I've said, ups the chance of a rate cut, and that coincided with this bounce in the world of decentralized finance, the BTCs, the Ethereums, and the like. And what I did there is I looked for the one which is the strongest, and among the names which I follow, BNB is certainly the strongest name in this domain. And thanks to the fact that crypto markets are trading 24/7 without any weekends, on Sunday, I went and got myself exposed to call options in BNB. And this is basically the play, which could be phrased like that. Leader is going to lead. So if this one was leading before, and it clearly did, it will continue leading if the market is to rebound from here. So that's my exposure on the long side. And you can see that we should enable 50-day. All the rest of the names in this space are below their 50. And actually, another idea for today, which I was considering, is reshorting them against this 50-day moving average. But I decided not to go with it because I already have something on the short side. And I could venture in the space of more sophisticated option expressions, which I will certainly do at some point in time, but not now. But that could be a variation of a straddle strategy where you simultaneously own calls, thus betting on the upside, and you also have puts. The only thing that should work, the only real danger here is that the price will stay near the strike points of these options. And obviously, in a directional move, one will go and will go away from the buy point, and the other will expire worthless, um, and will take premium paid with it. But the other one, which will work, will pay for it and will create some profits, quite likely significant profits if volatility is to expand. But anyway, the market will be there tomorrow, and I can try that. So far, it's holding quite well, and it does what leaders do, and its position relative to its moving average is good. Is good. It could actually lead to something like this in the coming days. It could maybe spend some more time here, ideally contract volatility and breakout here. At least test the highs. Who knows? This is the optimal scenario. Obviously, everything could happen, but so far this looks like a small um, cup with handle here. So we'll see. We'll see. Uh, Ideally, that would happen on October the 3rd, which is the expiration date for this call option. There are also some signs of weakness here. And by the way, I should mention that this growth, you never know which. Okay, not correct. The correct phrasing should be like this. It's quite often when the news piece, which was behind the move, becomes publicly available when the move has already happened. And in this case, we discovered that Kazakhstan was investing in BNB, and it is the first cryptocurrency to be purchased for this state investment fund. So obviously, very powerful news for this coin, and that's why the strength. The rest of this space doesn't look so good, and its general pattern here is a bit of a wedge after the sell-off. AVAX isn't that bad, by the way, but too volatile and way weaker than BNB. Um, Sold off, wedged a bit, and faced another resistance. You can see variation of this pattern basically everywhere. And what's even more interesting, Aster, which you could call an IPO play in this space, is quite weak today, as well as TWT. So new names don't get that positive attention in this market, which is an indicator of itself. So here I'm still long, and yeah, my strike price is 1,000. So we'll see. Will it hold? I guess the probability is a bit lower now since we're witnessing overall weakness in this space. But when listening to me, you should understand that my perception can change uh, in a minute or in an hour. For example, right now there is 1 hour and 18 minutes till the end of the trading session, and as I've said, coin trade 24/7. So closer to 6 p.m., I can see that this um, week is here. So that meant that they have scooped everything that was available, and that will play quite well with this scenario, in which we will see another day of contracting volatility here, here, and off to the races we go, or to test the recent highs. So we'll see. But overall, when you put this out of picture, this space looks quite weak. And maybe that's because the today's release, as I've said, hints on stronger labor market data for Friday, and that in turn could signal to the Fed that the economy is too strong, so too hot, and maybe it's too risky to lower the rate now. So that's no cheaper money. And these guys, they reflect it almost immediately. In my opinion, the most sensitive asset in this space. Let's take a look at what's happening in the indices now, and I will show you what I'm doing now um, on the short side. And I'll also mention a mistake or maybe a so-so trade I did today. So as you can see, the indices are sort of in the no man's land. S&P is trying to reclaim highs. Nothing too bad actually at this point. And so is MNQ. Um, and Russell is already quite weak. So what I wanted to show to you now is this chart, and it's a good indicator. And I was using it quite a bit, and I forgot about it at some point, but now I'm back, and this is advanced decline. It's the name of the indicator is the advanced decline line, and what it tells us is that there is a divergence between the so-called index names, which are driving the index, the largest companies, and the breadth, the participation, because this line, it reflects the amount of stocks which are advancing and declining, the difference between them actually. And you can see that this rally is quite shallow, and it was even a bit worse. It got a bit worse a few days ago, and that basically means that there are two scenarios now. The first one is positive, and that means that the rally should broaden. Profit taking in the leading names, such as the semiconductors, the hyperscaler infrastructure names, such as CRDO, for example. When managers will take profits, they will reallocate it to a broader basket of names, maybe operating under the premise of AI productivity spilling into the economy. And the other scenario, which is bearish, says that AI was in a bubble, or maybe something about the government shutdown will be different this time. Um, Whatever, something damaging to the economy, maybe a combination of these different factors, and that would mean that the advanced decline line, instead of joining indices, will actually drag them with it, and it will go down, continue going down, for example, like Russell does at the moment. So that's why having some short exposure to it is um, it's quite understandable in my point of view. So that's what I'm doing. I'm actually short this guy. I'm short Russell now, and I think I'll keep it um, to myself at the moment. How I express this short, it involves options, and it has uh, a very good mixture of volatility. Since it involves options, the downside is cut strictly, which is 1% of capital, and the upside is quite good. And it is a bit of a medium term trade for me. I will the expiration of these options is scheduled on in December. So with the hope that I will be able to catch a good part of this supposed correction. So that's what drives my skepticism here, and too many uncertainties are stacked at this moment. And another factor which is quite important, and I will show you my blunder of today. Now, as you can see with this watch list, everything is quite mixed now. Now, some names are going up, and some names are strong. The biggest of them, actually, and Farmer likes new reforms, but all the rest is quite mixed, quite choppy, actually. So yeah, I can elaborate a bit on the skepticism about AI now because I started seeing these first reports in which uh, people, organizations, management, investors, and entrepreneurs in general, they regret their AI implementations because it makes mistakes. When you replace your help desk with it, people start to complain because not only it makes mistakes, it's quite different when you interact with the AI instead of a live person. Hallucinations, stuff like that. And some numbers suggest that really useful implementations are quite rare, actually. And that could be the first one of the first signs that a bit of a more sober attitude to this technology is about to dominate the narrative in the coming weeks and months. And I don't have an opinion here, obviously, because AI is fascinating. Talking machines, it's pure sci-fi stuff. But there is another idea which is that this boom bust cycle is very constant, and usually when new technologies arrive, the expectations are not too realistic, and so are the valuations, and the correction is inevitable. And at some point, after the correction, after the inefficiencies from the pricing were weeded out, real companies come who drive the real adoption cycle. And it's not so emotional, but it's very persistent. The most recent example is internet boom of 2000s. Uh, Obviously, lots of companies went bust, but select few remained, and they were the key drivers behind the 10 plus year bull market, which ensued afterwards. So maybe we are close to the situation which is similar to what's happened uh, then. And maybe this skepticism is reflected in the second tier names. This was my today's trade. I jumped in, hoping it will rebound, maybe a bit in a similar fashion to what I am expecting to see in BNB, a bit similar technical picture, but it didn't work. It shook me out, and I had it on the spot, and the position was quite significant. So it's an okay trade. It just wasn't verified by the current market context, and that's why I consider it a blunder overall. maybe these signs of weakness here in and indecision in a name like this, maybe they reflect something bigger. Who knows? CRDO, as you can see, is in a bit of the same position here. Both these companies, they create communications for these new big AI data centers, and they are more vulnerable to corrections, not like Nvidia, for example. There are other news uh, which could be a bit bearish. Maybe this circle investment thing, which they did with OpenAI. Uh, who knows? So overall, quite cautious and uh, have long in the world of the coin, have short in the world of indices, and I think I'm targeting the weakest of them here. You can see some hints of on my expression here in my watch list, but I will, I won't elaborate at this point. And yeah, that's it. I would be really cautious now with new additions, as my recent trade in AAOI shows. These hot names could be the hot names of yesterday now, and there are not so many new ideas which work well too. Um, Obviously, this number looks good, like almost 12%, but is it tradable? Of course not. Well, almost not. You can buy the gap on high volume, but it should be verified by market context, which is not welcoming to this kind of expression at the moment. Yeah, I think that's it for now. Let's be in touch. Follow me on Twitter. Please like and subscribe this video, and uh, see you later.